Welcome to Markets Now. I'm Michelle Ruck along with Seifried, Zaner, Hedge, and a lower day except for cattle and grain trade under pressure again here, even though we're down into contract low areas in the wheat market. We just continue to see funds exit. When is this going to stop?
Great question, Michelle. We've gotten really very oversold in a very short period of time. Even on a daily chart, corn went from about 60% relative strength index down below 30%, which is what we would consider oversold. So we went from overbought, slightly overbought, to oversold in less than four trade sessions, less than five trade sessions. So you would think that we could be close to maybe taking a pause, an attempt at a bounce. There does seem to be some people out there that are still rather bullish for these markets.
Right.
But I don't know, Michelle, after being sideways for so long and looking for some sort of breakout like this, now that we finally have it, I think this is a market telling us what our direction is going to be going forward, at least until we get into planting. So I'm worried that bounces might not be as robust as some people would hope. I'm worried that we don't get back into the levels that we were trading at just mid last week. I'm worried that bounces are meant to be sold. So how long does this last? I don't know. I don't think we're going to keep free falling like we have been the last five trade sessions. Maybe we set into a more organized move lower, but it does feel like we're headed a bit lower here at this time frame.
Yeah, and do you believe that there was any one catalyst, or was it just a combination of factors, or is the market just not trading fundamentals at all?
Yeah, I think for the most part, we had been watching corn exports. We knew they were very disappointing. We'd be kind of saying, at some point they're going to start picking up again. And then shipments really just have been bad. And that just really hasn't happened, right? I mean, we've been talking about Argentina and the problems that they've had, the dryness, and it hasn't created any real sense of global urgency from that global end user to come in and buy U.S. corn. And so it just became more and more difficult to justify corn prices, old crop corn prices, up near that 680 level. And eventually we had to see what the downside looked like and, test some key support levels. And this time we got through them and we ran some big stops. And we don't know where the funds are. So how much of that selling is fund liquidation, or are they going short at this point?
Right.
So there's a lot of questions there. But this definitely feels different than what we've seen really over the past 6 months or so.
Right, so let's talk about the major areas of support that you're watching in corn. Old crop, we took out 650. Where's the next area of support, and where will it hold?
Yeah, I mean, today's low 630 was kind of a target there. The next one really is around 618, but the big one that you've got on that May corn chart right now is the gap that we have back from July, which is $6.50 down to down to 5.95 and a quarter. That gap has been a target for a long time, but we weren't really considering it because we had just been trading in a small range, pretty much sideways. Now it very much is a consideration. I don't know if we're going to go straight there because we have gotten very oversold, but that might be the target that we have to put in our pre-planting low.
What about soybeans? Because we've taken out some moving averages, but I think the 100-day moving average is still intact, isn't it?
It is still intact. So that bigger, broader, longer term trend is still there. Although with the way that we took out the 50-day moving average on Thursday after trying to hold it on Wednesday, it doesn't feel like we're quite done yet here. I think we're going to go try that 100-day moving average minimally. But the big target on beans is 14.14. So that May bean contract, 14.14, compared to where we ended the day on Thursday near 14.80. That could still be a fair amount of downside potentially yet for beans. And I will say, on this slide, it's been 50 cents in corn and 70 cents in beans, which, those both sound like big numbers, but comparatively speaking, it's not been as big of a move in soybeans yet compared to corn. That really is accelerated on Thursday. So the question is, are beans now the ones that are really taking the ball and running with this here? Or has it been enough, and do we get to see a bigger bounce with beans leading the way higher maybe?
Now, wheat actually started the slide, and now we're down into contract lows in Chicago, and I think maybe even in Minneapolis. So again, where does that market find a bottom?
Good question, Michelle. There had been we keep looking at that conflict between Russia and Ukraine, the war between Russia and Ukraine, hoping that it's going to support wheat prices and hoping that it's going to mean a big influence on our exports. It hasn't really done that. And then, go back to even last week, you had a whole lot of people talking about how you have this potential inverted head and shoulders formation happening on a wheat chart. And that could be a longer term bottom from which to have a very significant bounce off of. So you had a lot of speculative traders come in wanting to own wheat based on that. But then we took out that second shoulder. Not only that, we took out the head, and you wiped that sort of bottom scenario off the chart. And that's a problem for wheat, because now if you have the row crops wanting to head lower, corn specifically, wow, then you really have reason for wheat to maybe try to follow lower. You can't fundamentally say that wheat, has reason to go higher if corn's coming down, because the relationship between the two does not bode well for wheat. So
Yeah.
wheat seems to be in trouble, has been in this very significant long-term downtrend. It doesn't seem like we put in any sort of significant bottom for wheat just yet. So we're still searching for that bottom, Michelle.
So one market the funds continue to buy on the brakes here is the cattle market. We've got more contract highs back in the feeders again today, and of course, lower corn's going to help with that. But how long do you think that this rally is going to be sustained? Are we going to take out the 14 highs?
See, I really like that question, Michelle, because what we're not seeing in the cattle market yet is really any significant volatility. We don't have these days where we're limit up followed by days where we give a lot of those gains back. That sort of volatility is indicative of putting in highs in markets. Right now, you have a cattle market, a rally that is really very organized. It's like climbing that wall of worry, climbing the wall of worry. The cattle chart looks good. I don't think we're done yet. And fundamentally speaking, I mean, we've got less animals out there.
Right.
We saw weights drop very significantly. We're now looking at weights below the 5-year average, which that hasn't happened in a very long time. So the supply side isn't there, and we haven't done enough from a demand concern side. Yeah, we continue to talk about possibilities of recession and things like that, but box beef prices stay strong, meaning domestic demand is still there. So until that falls apart, we're going to be focused on that short supply that we know is going to be there at least through the third quarter of this calendar year. And I think there's still more upside potential. And from a technical standpoint, I don't see any reason or anything happening on that chart to suggest to me that we're nearing the end of this rally in cattle.
Right. Plus, the cash trade has remained strong, and that's methodically continued to push these futures. All right. Thanks so much for joining us, Seifried, Zaner Ag Hedge with Markets Now.